CS 2026 and everyone is getting rich, or at least that's what your feed wants you to believe. We've seen the boom, the AI boom of 2024, the recovery of 2025, and now we've reached the danger zone. Now, that this specific investment that is being shooed by every influencer, every major bank, probably by your neighbor who just discovered ChatGPT, it's being called the ultimate passive income play of the decade. But according to the latest data, it's actually a ticking time bomb. In this video, I'm going to pull back the curtain on the most overrated investment of 2026. I will show you the math of why it's failing, the AI fact washing tactics companies are using to trick you, and most importantly, where smart money is actually moving to survive the 2026 volatility. Look, I'm going to level with you friend to friend. I know you are seeing these ads. I'm seeing them too. They're all over your feed. I made $50K a month using autonomous AI, real estate flipping, or the tokenized AI bot that never loses a trade. It sounds amazing, right? Like the cheat code we've all been waiting for. Back in 2024, the play was simple. You bought Nvidia, you bought the big chips, and you won. It was the pick ass and shovel phase. But guys, we're not in the hardware phase anymore. We enter what I call secondary AI infrastructure scaling. And honestly, it's a total minefield. Here's a pitch they're selling to you. The lie. They tell you AI is all the work and you just collect the check. It's the dream of 100% passive income. They say AI is so smart. It can predict real estate trends or crypto swings with 99% accuracy. But here's the reality. And this is a part the influencer won't tell you because they're getting paid to shill it. We've officially hit the diminishing returns phase. Last year alone, $400 billion with a B was poured into AI infrastructure. The world is saturated with tools. Now in 2026, the market is waking up and asking a very uncomfortable question. Where's the actual profit? Most of the secondary companies are just burning through VC cash to keep the lights on. They don't have a product. They have a pitch deck and a fancy API connection to a model somebody else built. Why are so many people falling for this? I get it. It has to say rational when you feel like the world is moving faster than your bank account. So the three main reasons why your smartest friends are probably about to lose their shirt. The first one is a fear of missing out. Most people feel like they missed the boat in 2023 or 2024. They're desperate for a second chance at those 1000% gains. Scammers know this. They label their junk as the Nvidia 2026 because they know that's the bait you bite on. The second is the complexity shield. This is the most dangerous one. If I tell you I'm investing in the quantum LLM and whatever ledger protocol, you're probably not going to ask how it works because you don't want to look dumb. Use that as a red flag. If the tech sounds like a sci-fi movie, it's probably designed to confuse you into compliance. If you cannot explain it to your 5-year-old, don't put your life savings into it. The last one, we have the 2026 yield trap. This is a classic scam with a futuristic coat of paint. They offer 20% staking rewards or AI dividend. But ask yourself, where's that money coming from? In 2026, many of these platforms are just taking money from the new investor bank to pay original investor share. Now, it's a Ponzi scheme with AI written on the front. I'm telling you this because I don't want you to be in the exit liquidity for these guys. I want you to keep your capital for the actual opportunities that are coming later this year, because right now this fake gold mine is about to collapse under its own weight. Okay, let's get into the why. Why can't we just keep riding the 2024 wave? Because the math of 2026 has fundamentally broken. 2024 is a year of possibility, 2026 is a year of proof, and right now the proof is looking shaky. According to the latest 2026 Ghana report, AI has officially entered the throes of disillusionment. In 2024, we're spending on hype. In 2026, worldwide AI spending is projected to hit a staggering $2.52 trillion. But here's the key here. Recent survey shows that 194% of companies are increasing their AI budget. Less than 1% are reporting a significant ROI of 20% or more. We're in a massive spending spot cycle where companies are throwing money into a black hole, hoping a journey pops out. For an investor, that's a terrifying burn rate, not a growth signal. Number two, we have the regulatory world. Here's the hidden reason 2026 is different. Regulation is finally here. On August 2nd, 2026, the full enforcement of the EU AI Act kicks in. This is not just a European thing. Now, it's the GDPR moment for AI. Any company using high-risk AI models, which includes many of these autonomous finance apps you're being sold, has to meet insane compliance standard. We're talking about fines of up to 35 million euros or 7% of global turnover. Many of these mid-cap AI infrastructure stores haven't budgeted for this. They are about to get hit with a massive compliance tax that wipe out their margins. If the company you're investing in does not have a chief regulatory officer by now, they are a sinking ship. So number three, we have the liquidity squeeze. See, let's talk about the macro environment. We are not in the zero interest rate anymore. The Fed has signaled that rates are staying in that 3% to 5% range for the long haul to keep inflation at 2%. In 2024, money was cheap enough to gamble on 10-year moonshots. In 2026, capital is expensive. Investors that are pulling money out of speculative tech and moving it into MMF or deep value assets because you can get a 5% return with zero risk. Now, why would a pension fund risk million on an unproven AI real estate boat when they can get a guaranteed 5% yield? Before we have the sovereign AI pivot, now the shift from corporate AI to sovereign AI. Nations like Saudi Arabia and the UAE are pouring hundreds of billions into their own data centers. This sounds good, but it means the global AI market is fracturing. The universal AI dream of 2024 is being replaced by local, regulated, and siloed system. If you um, reinvested into a one-size-fits-all AI company, they are losing their global market share as we speak. 2026 market does not care about your vision, it cares about free cash flow. And if you look at the top 50 AI powered IPOs from last year, 42 of them are still cash flow negative. This is a bubble, my friend, and bubbles don't just deplete, they pop. Okay, look, I don't just want to scare you with data and leave you hanging. I want to give you the BS the doctor I'd use, because in 2026 AI washing is a professional sport. Companies are literally just slapping GPT integration on a 10-year-old Excel spreadsheet and calling it a revolutionary neural network. If you're looking at an investment and you're not sure if it's legit, I want you to run it through my 3-step hype check. This has saved me more money than any stock pick ever has. First rule, if it's a black box, it's a red flag. Here's a test. Ask the person selling it or read the white paper and try to explain exactly how the AI makes money in two simple sentences. If they start using words like synergistic neural architectures or proprietary quantum optimization, oh my goodness, without explaining the actual business model, run. If a friend told you to buy lemonade stand, you'd ask, where did you get the lemons and who's buying the juice? AI is no different. If the answer is the AI just finds the profit, that's not the business, that's a magic trick. And in 2026, magic tricks are expensive ways to go broke. Check two, the celebrity influencer push. Now this one hot because we all have creators we like, but by 2026, the Taiwan influencer move is a massive warning sign. Think about it. Why would a truly revolutionary private investment round need a YouTube or TikToker to fill the set? If the tech was that good, Goldman, Sachs, or BlackRock would have written a check for the whole thing months ago. When you see a celebrity or a big finance influencer saying, I'm so excited to get my community into this early stage AI private round, what they're actually saying is the professional investors passed on this and we're looking for dumb money to fill the gap. In 2026, influencers are the last stop on the hype train before it hit the wall. Don't be the one standing on the tracks. Last check is the exit liquidity trap. This is the most cold-blooded one. You need to look at the lockup period. I've seen so many people invest in this 2026 AI real estate funds where they promise 15% annual yield, but then you look at the fine print and realize you can't withdraw your principal for 12, 24, or even 36 months. They will tell you it's to protect the AI learning cycle or some other nonsense. It's not. It's because the founders and the early VCs have a shorter lockup than you. They're using your cash to keep the price stable while they sell their shares. If you cannot get your money out when things look shaky, you're not an investor, you're a hostage. Real investments have liquidity. If your passive income comes with a 12-month padlock, you're not just getting a dividend. You are providing the exit liquidity for the people who got in at the top. I'm not just telling you this for telling sakes. I'm falling for this fancy words and the exclusive access. Okay, I know we've spent the last 8 minutes popping bubbles and it can feel a little depressing. You're probably thinking, great Janet, everything is a scam. Where do I actually put my money? Okay. Number one, sovereign AI infrastructure. Here's a series of sentences. AI is hungry. It does not just need a code. It needs massive, ungodly amount of electricity and cooling. Smart money is not buying the AI app that might be obsolete in 3 months. They are buying the grid infrastructure and specialized cooling system. Think about it. Every time a new LLM is trained, either that center somewhere needs to stay cool or the whole thing's melt. In 2026, electricity is the new gold. Number two, agricultural tech, AG tech. Now, let's talk about something way more grounded, food. Look at the headlines from the start of the year. Between global supply chain shifts and the 2026 Climate Accord regulation, food security has become a national security issue. The 1% are currently moving into AG tech. I'm talking about precision farming, indoor vertical agriculture, and soil health tech. Why? Because you can skip a subscription to an AI headshot generator, but you cannot skip dinner. As the world gets more digital, physical assets like high yield farmland and the tech that makes it more efficient are hitting all-time highs. It is the ultimate edge against the digital double. It's tangible, it's necessary, and it says it's becoming incredibly high margin. Finally, we need to talk about pixel versus atom problems. Why people are choosing digital to pixel, the physical world is eating a wall. Due to this, we are seeing a structural deficit in copper, lithium, and silver. Copper is the nervous system of the modern world. You need it for EVs, you need it for data center, you need it for the green energy transition. We're not just mining it fast enough. Smart money is moving into deep value mining and recycling tech. They know that no matter who wins the AI war, the winner still needs a copper to run their machine. It's a pick and shovel play for the 2020s. I'll be honest with you, none of this is as sexy as 100 times AI bot. You are not just going to see a TikToker dancing in front of a copper mine or a vertical farm, but this is how you actually build wealth that lasts past the next market cycles. The 1% don't try they don't time the hype. They find the things the world must use to function and they buy them before the rest of the world realizes how scarce they are. You don't need to be a billionaire to follow this strategy. You just need to keep looking at the shiny objects and start looking at the foundation, because when the 2026 AI bubble finally finishes its corrections, the people who own the power, the food and the materials, they are the one who are going to be left standing. I'll see you in the next one. Have a lovely week ahead.